What is up, everybody? Logan here again with another video coming right at you. And today I'm joined with Vance from the Discord. And we're going to go over some support and resistance techniques, especially as we've gotten a lot of questions about our zero DTEs. And when I talk about, where we look for supply zones, we also have resistance zones as well when it comes to taking these trades. And we've gotten just a lot of questions about how we do it, how we manage where we find them, how we manage the trades based on when we hit those zones, looking at taking positions. So we're just going to go deep in depth with this today. But I do want to say I appreciate you coming back on the channel, Vance, and I'm excited to see what you got for us in this one.
Hey, not a problem, man. So support and resistance. So there's a lot of talk about support and resistance, and the other thing you'll hear about are supply and demand zones. And basically what they are is they're areas on a chart where when the price approaches them, generally what will happen is that there's a counter move in that area. And the reason for that is because there's people who, for example, in the example of a resistance zone, there's people who they want to take profit when the price hits a certain point. So as it approaches that point, they will go in and they'll sell their positions. Or you may have people that want a shorter position at that price because they expect it to go down. And that creates the resistance to break past it. The opposite side of support, which is those are levels where people want to buy a certain underlying when it hits that level. So generally, we use support and resistance to help determine whether or not an area is a good place to go short or go long based on the totality of market sentiment. Traditionally, a support and resistance level is a straight line going across the chart. However, it can move diagonally, which we tend to call those trend lines. But a trend line is also a type of support and resistance, but it's one that goes up or down exponentially based on the movement of the underlying. What we're going to talk about today are just straight horizontal support and resistance lines, because those are really the easiest ones to draw. The trend lines take a little bit more getting used to doing, and I find that they tend to break more often than regular support resistance do. So when you go to do a support resistance, the first thing you want to do is you want to try to operate on a clean chart, take off any studies or indicators or anything else that you normally work with. Just have a clean chart up. I have a clean daily chart, in this case of SPX. If I wanted to have indicators later on, I'll put them on. The two reasons why you want to do this, the first one is that you have more room to work, right? So you're not clouding up the bottom, the top of your chart with studies and indicators. Also, you won't have wavy lines and things going around the chart, which can maybe potentially blind you or take away from what you're looking at. And then the other reason for that is because you don't want to be unduly influenced by something that you see. So if you don't have any other study up, you're just looking at what you're working on, which is support resistance. Now, I do things a little bit different than what other places might teach. This is just from experience throughout the years. I always start with a daily chart. If you're trading on zero DTE, I always start with a daily chart, and then you can work down into tighter time frames. What you're looking for doesn't really change, but you always want to start with a daily chart because at the end of it all, right, we're working on a daily time frame, right, from the start of the day to the end of the day. So that holds a lot of relevance for what we're working on. Weekly charts or anything beyond the daily chart, the issue with using those is because it goes beyond a daily move, right? It can give you some valuable information, but at the same time, it's not relevant potentially to what you're doing, except if maybe it's like Friday, right? Because weekly charts week would end on Friday. So if you're doing zero DTE and it just happens to be Friday, the weekly chart could be useful, but otherwise we want to keep it to daily and lower. Personally, I like to use the daily, the 1 hour, the 15, and the 5. That's just my personal preference. Some people like to also incorporate 30 minutes. I just don't use it. I find that whatever's on the 15 or the hour is generally there on the 30 organically. So It just seems to be like an extra step. So I'm going to work on just 2 time frames today, just so you can kind of see the relevance. My recommendation is that when you do this, create a color code system. So, for example, an hourly line might be yellow, and a 15-minute line might be green, and a 5-minute line might be blue, right? But come up with your own system, because you don't want to take lines off charts. You want to leave them there, because lines can be relevant far, far down the road. Because, like in the case of SPX, right? We haven't been down in the 3000s, like where we're at right now. We haven't been there since 2000. But some of the lines that I drew on my other chart from a couple of years ago, right, they held up when we were just recently down there. And I was showing, examples of my chart in the Discord, and I would say, like, 38.22 or whatever number it was a support from like 2 years ago. And man, it went right up to that thing and bounced right off of it, right? And that was a 2-year-old support line. So time frames don't, length of time don't tend to matter as much for long-term supports, especially at like a daily level. So having gone through all that, I'm going to start showing you how to do this.
Sweet.
So the first big thing that I do differently than some other people do is I tend to draw my lines based on where the candle ends, not where the wick is at, right? And we're going to end up catching wicks in it too. But let me give an example, right? So if I scroll into this area right here, which is last October, right? A couple weeks ago, yep. Right? We're going to find right about here, right? Right here at this level. And let me mark it up with a line. Horizontal line, right about here, I would say is a support level. Now, the reason why I'm going to say that is because if you look, we have a candle that basically we have 1, 2, 3, 4 candles that basically touch that line and don't go past it. Then we have a bunch of other candles that wick through that line, but don't go, and then come back. So what that tells me is that 36.88, right around this area, is a strong support level. And you can see that going back here into May, again, when we came up into this zone, it sold off. So that tells me that this is a strong level. The reason why I don't use the wicks, right, is because when you're using a daily chart, right, what you're looking for is where the day ended, right? I don't care if it went all the way up here during the day, right? I don't care that it went to 37.17. It ended the day below 36.88, right? Just like this day, it ended the day below 36.88. On this day over here, it ended the day below 36.88. So that is a level that is a support and resistance level in either direction, right? So now, because of that, there is a caveat to that. What you have to understand is that when I draw these levels, I'm not saying that this level will not ever go past it. What I'm saying is that the day likes to end below it, right? So you have to take that into account also, right? Traditionally, a lot of people would draw their line up here because they would say, oh, all these wicks end up over here. So I'm going to draw my line up over here. The problem is that you have days where it doesn't even get to the support level, right? And so it doesn't give you the true area. Now, the newer way of drawing this, right, is what they'll do is that people will draw like a horizontal box, right? When you talk about supply and demand zones, what will happen is you will get, as I look for rectangle here, you'll get people that will draw a horizontal, they'll draw like this rectangular, and they'll say like, oh, well, this is a supply and demand zone. And I agree, that's a zone where it comes up into it and kicks back out of it, right? But I like to find the line that touches the most candle bodies. One of the things I do to a fair degree of success in the Discord, for those that have been around long enough, is there'll be numerous days that I will, by like 2, 3 o'clock, if not a little bit earlier, I'll call the close. I'll say, yeah, we will probably close around a blah, 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 if we don't break this number. And that's because I've drawn these lines and I can say, okay, well, we tend to close at 36.88 quite a bit. We closed, you can see the number of times we closed 1, 2, 3. This was 10 points away. This point was right at it. This was 5, 10 points above it. Just this level here, we've closed at or at within 5 or 10 points of 36.88, probably about just eyeballing it 10 times. Almost every time it ends up in that zone, it closes near that level. Right? That's how I say these things with a degree of confidence, because I've identified it as a level where the candles like to end. And that's why I draw my levels there. So if I were to go through and draw some lines for this chart, right? Let me go back to the horizontal line. So we're going to zoom out here. Maybe you can go back in one. So we can see that there's a level right around here on the draw line there. You can see that we have some confluence here, there. You can see it. I'm not saying that things don't break through it, right? Because you do get candles that break through it all the time, right? But you can see that there's a lot of interference at that level, right? And a lot of times when you do have these candles that break through it, what you're seeing is they're strong candles. Like this was a gap down. It had a gap through it, right? This day it bumped up against it twice. Then it broke back down. Then it broke up through it on a strong candle. Then it dropped back down and acted as a support. You'll find that support and resistance lines generally are one and the same. A line is a support line on the way down, and it's a resistance line on the way up, right? So once it breaks through a level, then it has to fight to break back up through it, right? But so this seems to be a strong level, and that's at 4,000, which makes sense because whole numbers are generally strong levels. The other thing with these is always give yourself, 2 or 3 points on either side, right? And the reason for that is that everybody draws their candles just through their lines a little bit differently, right? So I might say 39.99. If John's drawing it, he might get 4,001. Sarah might draw it and get, 39.98.25 or whatever. So whoever's drawing it, and you've got thousands, if not hundreds of thousands of people who do this type of technical analysis on a day-to-day basis, and they're basing their decisions off these. So you have to give some wiggle room. It's not like, well, I drew it at 4,000.02, and that's my line in the sand. It's never going to break that. Like, that's just a bad mentality to have. But it's an area, right? And that's why when it gets to that area, you start to look at it and go like, huh. So the other thing that I like to look for, and I'm trying to find a good one here, is what I call a reversal zone. And this, I'm trying to see if it was one. I'm going to see if it stays one. So again, one of the things that happens quite frequently in the Discord, here we are. This is a good one right here, is I will say, all right, as long as SPX stays below 39.04, we're good. But if it breaks past it, we will have shorts cover. And the reason why I'll say that is when you look at some of these charts, what you find is you'll see that you'll have wicks that go right up to the line and then come off of it. But then when you're above it, you have wicks that basically go right up to the line and go up. So what that tells me is that when we're below this level, right, this is where shorts like to come in. They like to short this price point, right? But when they're above it, no one wants to short it. They want to cover it. And that's why you have these wicks, these bottom side wicks that go to the line and then come off it. What that tells me is that shorts came in, but were bought up, right? And so when you have a level like that and it gets breached, the closer you are to the end of the day with that level being breached, the more likely than not, you'll have one of those explosive moves up, right? Or you can get the opposite, where if you're below that level near the end of the day, you're getting an explosive move down. And the reason for that is because people who are trading, right? There's a lot of day traders out there. And remember, SPX somewhat mirrors the ES futures, and it's somewhat mirrors, well, SPY technically mirrors SPX, but irregardless, the point is that people who are longing and shorting the futures or longing and shorting things like SPY, right? They're going to take profit at certain levels, and they're going to get out of shorts that are upside down at certain levels. So when you can identify those reversal zones, right, those are really, really powerful tools, because then you can use that as a gauge whether or not to stay in a trade, right? If I've determined that this level here is a reversal zone, 3904, right, which it looks to be one, right? And if I were to take a call credit spread, right, and I'm above it, let's say I take a call credit spread at 39.15, right? So I'm 10 points above that level. But all of a sudden now 39.05 breaks, I would probably cut my call credit spread without, I don't care where it's at, because the likelihood at the end of the day that a lot of shorts start to cover and the price explodes up is pretty high.
Yeah.
Right. And I don't want to get caught in that upward motion. And that's why you have these days where like all of a sudden in power hour, you get like a 15, 20 point move. And it's strong in one direction, because a lot of the times it's at one of those levels where either the shorts are going to cover or the profit takers are going to take profit, and or the buyers are going to come in and they're going to be like, oh, well, this is way lower than what we want, and they're going to buy it up, right? So that's why you get those big moves sometimes in power hour, whether it's people or algorithms or whatnot. It's levels, right? Everything is set to levels. People trade at levels, right? They say, oh, I want to take profit here, I want to sell off here. So that's what we're looking to identify. So support resistance levels, and when you look to find those mirror points, those reversal points, very, very key zones. What's funny is you can see I was only working on this part of the chart, but if I roll back to last year, oops, didn't mean to draw that line, but if we roll back to July of 2001, you can see how some of those lines we drew. See, look at this line I drew. I wasn't even looking at this part of the chart, but look at the number of wicks below it.
Yeah.
So, and same thing here. So, and that was a reversal. This is the reversal level I was talking about. And you can see even going back to March of 2021, right? They anything when it was above that level, the buyers came in, right? When they were below that level, the shorts came in, and it was a strong buy short level. And again, 3,900 is pretty close. 3,904 is pretty close to 3,900, and whole number levels. Anytime you have a whole number, just something with 2 zeros at the end of it, strong levels. If it's got 3 zeros, it's even better. When we get up to like 10,000, 20,000, which in our lifetime we'll probably see, unless they do some sort of corrective measure, like those will be even stronger levels, because the more zeros, it's a psychological level.
Yep.
But even this lower line here, right? Again, wasn't even looking at this part of the chart, and you could still see relevance at this level a year before. That's why drawing this is so powerful. You could have drawn levels here, right? And when we got to these levels this year, they would have held, if you had drawn levels here, they would have had confluence over here. That's why this is important. So now that I've put a couple lines on the daily chart, I'm going to go down to a 15-minute time frame. And when I draw these at the 15-minute time frame, I'm going to change my color, because I want them to be 15-minute levels, and I want them to be blue instead of yellow, so that I know the difference. So I'm going to pick a nice little relaxing sky blue there.
Well, I like
and
that.
it's nice. It's nice. It goes counter to the insanity that is the stock market on most days. And we're going to do the same thing here. So like my eyes immediately is drawn to this, because there's all these wicks right here.
Yeah.
So I can tell you right here that this is a level, right? And you can just see the number of times when we're above it. If we're on one side of it, it pushes down. If we're on the other side of it, it pushes up. And you notice that the candles that break through, they're all strong candles.
Yeah, they are.
Right? And sometimes they get sold off. But this candle's strong candle at the end of the day. This is when missiles hit the Ukraine, or sorry, missiles hit Poland. This is what this candle is right here. I know this candle well, because I'm going to trade because of it, that I don't want to be in anymore. But you can see that again, it sold up off this level. It broke below 36, this level here, and it bought up. And then you can just tell. So this again is you don't generally get the reversal levels on the 15-minute chart, but you do get you get strong levels that they fight to control. So this is what I would call a point of control level, right? Because that's what you get in the finer time frames. That's what you get is you get levels that are points of control. Above the level, the buyers control it. Below the level, the sellers control it. And you can see that whenever they're above it, right? I mean, this is a strong candle right here where they're fighting for control, both these candles. Who's going to win the battle? Well, this one, the sellers won. And they took below it. And then the sellers pretty much controlled it all day. Buyers came back in midday, but then the sellers took back control and closed under it. And so the sellers won the day, at least on that candle is concerned. So
Wow.
that's basically what we're looking for, is just we're looking for areas where we have strong, here's one right here, right? And you can see that above that level, see, and what happens is, and again, this is why I don't use the wicks to draw. Like if I were trying to draw, like, because I drew this candle right where it was at, I would say that most people who have no idea how to read a candlestick chart can look at this and be like, oh, I see what he's talking about. Whenever it's below that line, it seems to be that the seller's coming strong. Whenever it's above that line, it seems to be the buyers are strong. Well, if I start trying to use these wicks are all over the place.
Yeah.
So what are you gonna do? You're gonna be like, oh, well, this one right here looks kind of good. That doesn't actually tell you anything, because when you go back and look, you really don't see a lot of any proof that this line does anything. But conventional wisdom will be like, draw the line off of the wick. No, draw the line off the base of the candle where the wick and the candle meet, and you find where you have the most of those, and then understand, right, that it's going to go past that candle, right? If we go back to the daily, go back to the daily chart using that same blue line. Look how many times it goes past that candle, right? This is not a daily level. These are clearly 15-minute levels, right? You can tell that by looking at it, right? This one actually has some daily confluence, some, right? Because you can see that there is some buying and selling, but it's not as necessarily strong as the yellow one, right? And when you look at the yellow one on the 15 minutes, again, you'll see that, yes, see, look at that. It was kind of the same thing. Below it, it was strong, right? So that's one of the things to keep in mind, right? Is that the higher the time frame, the more relevant it is on the entirety of the chart. But the smaller the time frame, the less relevant it is on higher time frames, right? So you always have to take that into account. A 15-minute level is great, right, for determining, okay, this is where we're controlling the market. But then if those levels get broken, if there's not one immediately right behind it, you need to cut, right? Because like using, we drew these two strong yellow levels, right? Well, if you were in a put credit spread on this day, right, the moment this level broke, right, you were kind of in trouble, right? Because it broke that level. There's no daily support to all the way down over here.
Yeah.
Right. And that's like 100 points. That's not 100 points. It's like 65 points. So if you had a put credit spread and this point of control breaks, you might need to start considering what you're going to do, right? And that's why you want to look at things on a higher time frame and a lower time frame, so you can set up your different levels and your area of attack and what your plan is, right? To identify, okay, should I continue to hold? Should I cut? Right?
Yeah. And I don't mean to cut you off real quick.
No, by all means.
What happens quite a bit too with the group, and I noticed this with a handful of members, whatever the problem seems to be at the time, whether they're just oversized or not as confident, maybe don't have a full understanding, is, occasionally our trades, right? You place a trade and it goes against you, and you have this unrealized loss at the time, like maybe something that you put on for 50 credit or 40 credits up to 80 credit or $1, right?
Right.
Just because they don't know, hey, we're coming into this zone here, and this is my criteria, is once we hit this level, then we can look at managing the trade. But the whole
exactly,
you're getting anxious because it's up to 60, up to 70, 80, 90. I think people are just wasting their time being anxious about it, because that's just the nature of how the market moves, right? Like,
Right.
let's say you take a put credit, and then we start to break down towards the level, but we don't break through it, right? Because breaking through
Right.
it and closing below it, then I'd be like, okay, let's start to manage. So that's just
Exactly.
PSA I wanted to give really quickly for like
Absolutely.
anybody who, if you're nervous about the trade, it's like zoom in, check out your resistance and support levels real quick and double check, see, hey, is where I'm at for my criteria still in play? Because if so, there's no reason to get out of a trade just because it feels bad at that moment, right? Because that's a big
Exactly.
issue with trading is the emotional management side. I just want to say that real quick before
No,
we.
no, and that's a great point, and I probably would have skipped over talking about that, but that needs to be discussed.
Mhm.
So, when you have a trade on, right? When you have a trade on, one of the things that you have to always be aware of, right, is where these levels are at and where the market is in relation to it. So a lot of times people will always ask in the Discord, like, do you guys use a stop loss? Or do you have an automatic stop loss? And I always chime in and say, I don't do anything automatically.
Yep. Same here.
Everything for me is some degree of analysis, right? What I will do is if I identify that 4,000 is a support level, right? And we have a call credit spread, I will set 4,000 for an alert because I know that's my level. So if 4,000 gets touched, I'll get an alert. I'll get an email or text message that will say, hey, SPX has hit your alert level. And then I know, okay, I have to go take a look at the charts. I got to see what's going on because I can't sit here all day long and watch the computer screen while
Yep.
I'm doing my real life job, right? So I have to manage it both ways, right? I gotta keep an eye on things while I'm doing other stuff. So that's why, all the time in the Discord, I will say, okay, if this level broke, now we'll start and sit and watch and see what's going on. Like maybe now I gotta actually actively put eyes on it, right? So it's hard to give a hard and firm rule on what actually constitutes a breakout,
Mhm.
right? But my personal feeling is this, right? Is this is where an hourly chart becomes super valuable, right? Super valuable. If you take any line that you draw on a daily chart, right? Any line that you draw on a daily chart, if you learn nothing from this video, this is the part to pay attention to. If you draw a daily line, right, and you have that daily level, go to an hourly chart. If the candle closes above your line on an hourly chart, then you immediately have to start watching the next candle because that will give you a clue whether or not your trade is in trouble. So I'm going to use this as an example, right? This yellow line right here at 36.88. You will see on this day, this would have been 10:20, right? At the 12 o'clock candle, closed right at that line, but it closed above it, right? But the following candle, the 1 o'clock candle, it went way below it and it closed way below it. The following candle closed below that line. If I had a trade below here, right, I would probably think very seriously about cutting it because, and it did come back at the end of the day. No, it did not. It did not come back at the end of the day, right? So since that daily level was broken on an hourly, and the next candle closed below it on the hourly, and I not even probably cut the trade, right? That's just again, it just depends on. There's other factors involved in it too. Obviously, how close are you to being in the money? Are you upside down? Whatever else. There's a lot of other things, right? But if on an hourly chart, like on this day right here, right, it kept bumping up against this line, but it never held a candle above it, right? So on a day like today, if you had had a call credit spread at, let's say, 3,700, right, this is 12 points away, right? So you might have been pooping in your pants at 10 o'clock in the morning when it hit this level, right? You might have been in trouble. You would have been probably upset all day long, right? but the fact that this level never broke on an hourly chart, I would be confident to continue holding the trade until that level broke, right? I'm a bit of a riskier person just by nature, but I'm also confident in my technical analysis. So my gut feeling is that if you can't sustain it on an hourly chart, you can't break it on a daily. Does that make any sense to you? Like in order for any type of trend or anything to happen, it has to happen at the 1 second mark first. Then it has to happen at the 5 second, and then and so on and so forth. So if you can't conquer something on a 5 or 15-minute chart, you're never going to conquer it in an hourly chart.
Oh yeah.
And if you can't conquer it on an hourly chart, you're probably not going to conquer it on the daily chart, right? Because it would literally have to be like the very last hour for it to be hurt. So on a day like today, on a day like this one here, where it just wouldn't break this line above, I would be very comfortable with any call credit spread that was above it, right? Oh. Same thing with this, with a put credit spread. If you run a put credit spread on this day, right? I mean, this is actually the end of the day right here. So you had all these, even though it was a downtrending day, the whole day basically, it was kind of range bound, but still kind of downtrending, right? It never broke this line, or it never held below the line on an hourly chart. So if you ever want to know what a good thing to do with any of the lines you draw, even if you don't draw lines on an hourly chart, right? Use the hourly as your focus point, as your litmus test for whether or not a support or resistance level breaks. Look at this day, right? Look at this day. It cleared up almost 37.11 on an hourly, but then basically broke right back down.
Yep.
So that's why you have to, and I understand. Yeah, sometimes trades go in the money and that sucks, right? But sometimes you have to, you have to hold on to something. And that's why we don't use stop losses a lot. That's why you have to really know what you're doing. If you just want to pick any 2 strikes and put on a trade, you could, it's almost like a coin toss, right? You could win a lot, you could lose a lot. If you use deltas to trade, if you use any of the out of the money metrics, and I love the odds based stuff, right? I love it. It's my bread and butter. But even with that, I still use my technical analysis to reinforce what I'm looking at, right?
Yep.
Part of the reason why I got kind of clapped with that the missile trade the other day was because I was basically playing off of this 4,000 level. It was holding until we had an errant missile strike in Poland, and then the market just reacted heavily to, potentially World War III type bad news. I totally get why the market reacted that way, right? But my gut feeling is that level probably would have held if the bad news hadn't come in, because it had been holding all day long.
Oh yeah. Well,
so
I was gonna say, is this everything you want to chat about in this video?
I do believe so, sir.
Awesome. Yeah, we can do some more, research on all the other questions that anybody might have regarding this video if you guys are brand new to this style of trading. But this is what Vance and I have been using and what we've been doing as far as grabbing these zones. And I really appreciate you coming back on for this one. And I'm just excited to see how the trading goes for the rest of the year with us. And just, I feel like I learned quite a bit in this video too, of just things I didn't know before, which is always helpful, right? Like we're always all learning. So I do appreciate all your help in the Discord as well. And if you guys would like to come trade with us, the link is down below. And yeah, just really excited to see now that I can add even more bag of tricks, right? Like I don't do any charting on like the 15-minute very much. I do occasionally. It's a nice chart that I use maybe a couple times a week, but definitely not every single day. And, this will give me something to take a look at. So I really do appreciate you coming back on. If you guys haven't made it this far, leave a like, a comment below, and a subscribe. And Vance and I will see you in our next video.